sorry to the ones in the UK and in the Netherlands because it's -6 or -7 hours. So for the UK, it's 5 a.m. So very sorry about that. So they might join a little bit later. Today we have a peer-to-peer and business introduction session. We have David Soukhasing, which is a great honor for us because David has been running one of the largest and most prolific angel investor networks here in Indonesia called ANGIN, and we will have a deep dive into angel investing with him and also his unique take on due diligence. And today, very special, we will have our first business introduction from Ternakin. What is Ternakin? We will get into that later. So let's get started. Today we will, as I just mentioned, we will have a peer-to-peer and also a business introduction, and then we will finish it all off with a Q&A session. So in our program, as we always mention, there's an investment side and there's also an angel community side or capacity building side. And today, quite a lot that we will be covering. So basically to avoid a high failure rate, today David will be talking about due diligence. We'll also talk about, probably we will touch on some of the regulatory and compliance risks, touch on it. Yeah, for the angels and the angel community on the capacity building side, we will have access to a viable and scalable business today, which is Ternakin. We will touch on lack of investment skills, basically building on that, and also making everyone stay updated with industry trends. So let's start with the first part of our session, which is a deep dive into angel investing and due diligence with David Soukhasing, Managing Director of ANGIN. David, just a second. We will just basically introduce you real quick. As I just mentioned, he is the Managing Director of ANGIN, and he has been doing that since 2015. And basically their mission is to support early stage investments and also entrepreneurial ventures across the country. And ANGIN itself is Angel Investment Network Indonesia and is the country's largest network of angel investors providing early stage funding, advisory services, and capacity building support to startups and SMEs. And what is very great is that ANGIN has, I think, if I'm not mistaken, over the course has had 100 to 200 angel investors and has also enabled investments in over 35 startups across diverse sectors. That's enough about David. So now I give the floor to David.
Perfect. Okay. Thanks so much. So you guys will be navigating the slides, right? Okay, perfect. So first, I would like to extend, a big thank you for the team, for inviting me, for everybody to make time. I'm happy to share, I think, more than 10 years of experience with ANGIN. So hoping it's very practical and useful for everyone. And I'm hoping that my French accent will not be a bottleneck to you understanding everything. Probably you can use some AI or caption. So maybe next slide. Just quickly, so I wouldn't go too much into details, but my background's always been into investment since I left uni. So I studied in France. I'm French mixed Vietnamese, but I spent most of my time in Europe. Study finance, corporate law, moved to private equity, and got lucky to start my own ventures back in Paris. So I used to be a tech entrepreneur as well back in 2010, actually. And we exited the business. So it was quite a lucky exit. And at that time, I wanted to get closer to my Asian roots, so make my way to Indonesia, studied an accelerator in this country, and then got this opportunity to take over ANGIN back in 2014, actually. So it's been more than 10 years. And since then, we have been growing quite a lot. And this is how I'm going to share some of the experience today. Next slide. So for the one who don't know us that much, we are called ANGIN, and it used to be an acronym for Angel Investment Network because our initial model was to actually be a support to angel investor only. So we used to provide services to angel investors such as sourcing, due diligence, deal execution, all the way to portfolio management. But this business has been difficult. So we started to also expand to different type of investors, working as well with what we call institutional investors. So we also serve VC, banks, corporates, all the way to development agency who also have a desire to invest in early stage organizations. Next step, next slide. So if we are to summarize, I think what ANGIN is providing, investing is not an easy journey. I think Arifin was sharing some slides, and vice versa for entrepreneurs is not also an easy task. There's a lot of steps, in between looking at a deal and investing. So we're actually providing services along this long journey, which involve, sourcing deals, doing all the due diligence, all the legal aspect, and the hardest part, which is the portfolio. So we provide basically services to investors to ensure that at least their investment has the higher chance of success and is implemented properly. And we have been doing it over the last 10 years, more than 120, I think 125, the last numbers, deals. And we deploy around more than 35 million US dollar in investment in Indonesia. Next slide. Yeah, and obviously, as I mentioned, dealing and finding a business model to serve angel investment has been difficult. So we also start up ourselves. We're independent. We don't depend on any grant and donation. So we also have to find a business model. So we have been also developing different services you can see over the years. Moving, from a fund side, when we gave up the fund model, we moved to an angel network, moving to basically also advisory services. So I wouldn't get into too much details, but it was also an interesting journey as also entrepreneurs. Okay, so I made the presentation today in two parts. One is to share a bit more about what is happening on the angel investment side, what we have been observing, some insight, and the second part will be more on the due diligence. And as Arifin shared, sharing a bit of, in an honest way, how we have been dealing with due diligence, what have been our learnings. Okay, so hopefully it will be useful and trigger some interesting discussion. Next slide. Let me move it here. So we started basically working with angel investor back in 2012, and it was a very nascent ecosystem. I don't know if you remember at that time, but Gojek was still a call center, I think with 20 operators back in a small space. So we were really, I think, pioneering this investment, and most of the VC were not very active. So at that time, we really wanted to sort of trigger angel investment because it was a very catalytic role for developing, I think, early stage organization. So we started, very small checks, etc. And we have seen the market quite evolving. I sort of divided it into 4 main periods. After, 2012, 2015, we started to see a bit more like what I call consolidation, a very interesting development. We see new angel network being formed. A lot of programs were developed for angel investors. We see more and more co-investment between angel and VC, and the ticket size started to be more mature and increased. And COVID was really, I think, a tipping point where we really saw the need of and the role of angel investors. A lot of VC were not super active. A lot of them were foreign-based, didn't play always a critical role in supporting some of the entrepreneurs. So some of them were struggling and turned to angel investors, to extend bridges, etc. So we see quite a lot of development during COVID. And even ourselves, the number of transactions, the number of angels really grew during COVID. And right now, I think we are quite in an interesting momentum. And I think this program is also a witness of what is going on. I think angel investor is really growing in different part of the Asian market. We have seen more and more actually angel network being formed. Some are very niche, some are very specialized in certain industry. There's also maturity in terms of developing investment thesis beyond just return and considering ESG and impact. And what is interesting, I will share later, is I think there's a trend moving away from equity and considering different type of instrument to invest. Next slide. Yeah, so I mean, I wanted to share it's going to be a lot of different backgrounds, different instruments, but basically from left to right, this is what we have seen, right? We used to focus a lot on, I will say, traditional angel investors, coming from traditional business. I call it first generation or second generation of business conglomerate, etc. And over the years, we see quite a development in terms of appetite for angels. Then we see the next generation, the son of our, we say first angels being interested into investing. Then we move to basically white collar executive, C-level, banking, consulting, executive joining our network. And lately, I think we are quite bullish into 3 types of profile, which I'm sure I think some of you are part of. We have seen a big movement into diaspora, trying to basically contribute back to the Indonesian early stage investment. So more and more Indonesian based overseas, West Coast of the US, Netherlands, even Singapore, Australia, trying to see how we can actually contribute back and do angel investment back in the country. And I think lately, you know, the development of, I think, some exit and some entrepreneurs who also partially exit, we see more and more founders turn investors as well. A very interesting type of profile, starting also to look at angel investment and at different platforms to invest. And I think lately it has been probably 2 or 3 years, more and more celebrity influencer as well, trying to see how they can contribute through their image and capital to early stage investment. So a lot of evolution. And the next slide is the same thing for, next slide. For the type of organization, I think a lot of time when we think about angel investment, we always think about tech startup, but also there have been an evolution about the type of organizations our angels look at. So I think tech startup has been the first sort of layer of target companies, but lately we have seen more and more angel investor looking at social enterprise. So businesses creating a social and environmental impact beyond making, you know, return and profit. And also like regular, I would say more like brick and mortar type of companies, SMEs. And even lately, we have seen an appetite to finance projects. So not necessarily to come at the company level, but to invest in projects. Bottom line, I think what we see is there's an appetite to invest in innovation. That doesn't need to be necessarily technology, but also can be through, you know, as you can see at the bottom, business model innovation, the type of market innovation. So there's actually a look at beyond technology startup. And lately, I would say there's even more and more appetite for the SME brick and mortar type of businesses. I give some examples of the type of companies we invested in. Next slide. And same thing on the instrument side, a lot of evolution. So obviously, angel investment, we always think about, you know, equity and taking shares into companies and exiting through, you know, capital gain and valuation gain. But same, we have seen an evolution towards more like self-liquidating instruments. So right now we are working a lot with angel investor towards debt, revenue-based financing or profit sharing. And we are even thinking about creating more and more instruments basically to satisfy different type of risk appetite, different type of, I will say, market conditions. So that's what on the left side we are trying right now. Our focus is really to be creative in terms of instruments. And I will share some example later. Okay, next slide. Yeah, and obviously, Sam, the motivation changed a lot. I think on the first step, we work a lot with investors who only probably consider return as the main factor to decide to make an investment or not. But we have seen quite a lot of, I think I will say, sophistication or diversification of motivation to be an angel investor. It's not only about return, but also it could be a very strategic move, you know, to learn about new technology, or more like actually an impactful journey to basically see how your capital can actually contribute to the achievement of the SDG, for instance. And I think more and more we see this investor blending different type of motivation and not only looking at this through a return point of view. Next slide. Yeah, so I will probably do only 2, but this is to zoom on some of the, I will say, theme or like strategy some of our investors have been implementing. I mentioned impact investment. So I think we have probably half of our investors who invest beyond financial return and look at basically an intentional way to contribute to the SDGs. So every time they look at an investment, they look at the social impact or environmental impact. So I think, you know, I put also some examples here, but we are looking basically in very strategic themes such as, you know, agriculture, waste management, education. So yeah, that has been quite interesting, I will say, strategy, and actually to share a bit, most of the return we made actually on companies with this kind of impact. Maybe next slide, I will cover this one. This is an interesting theme. Obviously, in Muslim majority countries, we have a lot of our investors who also consider investing with a faith-driven aspect. So we're also trying to develop more and more Sharia-compliant angel investment instrument. As you know, equity might not be the best type of form, so like straight loan is not necessarily will still align with Islamic principles. So we're actually looking at revenue-based model, and it fits quite well as well with the intention to invest in real businesses, real assets. So that's also quite an interesting development we are seeing and we are trying to be part of. Maybe we can speed up to this one. So as I mentioned, right, I think as probably you all know, getting an exit from your investment is not always an easy journey. It takes time. So we have seen more and more investors looking at way to create some, I would say, safe liquidating instruments, so debt, loans, etc., but with a bit of flavor. So we are developing more and more hybrid instrument, mixing debt and the potential to get some upside for equity. So in that case, you invest in a debt instrument, but you have the option and not the obligation to purchase shares of the company. So we have been deploying this kind of instrument over the last 1 year in 2 or 3 deals, and happy to share, maybe not today, but reach out to me if you are interested in this kind of instrument. Yeah, this one is also interesting. Obviously, genderless investment has been sort of in our DNA since day one, but that's also another strategy we have seen a lot. Half of our investors are female, so we have a good balance of female and male investors. But genderless investment, basically how your investment contribute to gender equality inclusion, has been a very big theme in our network. Yeah. Okay, so due diligence, that's maybe the most interesting topic. Next slide. So to be sure on the same page, obviously, I'm sure all of you are familiar with due diligence, but basically the process of evaluating a deal before making an investment. And next slide. And usually there is kind of this usual suspect, which I'm not gonna get into too many details because it's readily available online. The type of things you look at, obviously the team, market, industry, etc. But this is maybe something I wouldn't get too much details because, again, available online, but I would love to share maybe what I witnessed in our network. Next slide. Yeah, so sharing a bit, I think there's no one school and one approach to due diligence. If I look at our investor group at the moment, I try to break down sort of their approach and mentality towards due diligence. I sort of trying to segment in 4 categories. The one who follow, meaning they don't do any due diligence, they follow on someone else, they piggyback on someone else's analysis. The one who do, on the opposite, very DD due diligence, spend more time than usual, really check deep dive into a lot of aspects. The one who don't do any due diligence, even don't follow anyone, they just invest, based on some gut feeling or like quick decision. And this is 25% of our group. And I will say 40% fall into what I call normal due diligence, which is industry standards, going through basically a typical screening process. Yeah. Next slide. And this is, I have so many lessons, honestly. We have done more than 100 deals, break our teeth on a lot of investment, but I wanted to share a couple of lessons I think learned from doing investment, and hoping it will be interesting. Next slide. Sometimes a lot of people ask me, and it's a bit weird because we're also selling due diligence services to investors, but is due diligence a guarantee of success? And I try to look at the data, and I will say there's not actually such a strong correlation. I think we will assume that the more thorough due diligence you do, the greater the chance of successful exit. But I think the data tell us quite a different story. There's no actually obvious correlation in our network between the level of due diligence you conducted and the success of an exit. And it's the same thing if I look at sometimes some investors like VC and impact investors, the one who are very well structured, doing very heavy due diligence, don't have actually a better performance in terms of exit versus some who don't do due diligence or just follow. And I used to be part of different VC, and I used to be part of VC who are follower, VC and impact investor who do heavy DD, and surprisingly, the one who follow have a higher exit rate than the one who do DD. So again, I don't have a conclusion, it's just to raise an interesting questions. I do believe we are overestimating the role of due diligence, in predicting success. And the question is maybe there's other decisive factors at play. Maybe it's about market timing, founder resilience, or just luck. I just leave it to an open questions. I just share some of the data here. Okay. Maybe the next slide. So this is a book actually I read when I was back in uni. I'm sure some of you know it, The Black Swan. Basically that says that in business, the biggest game changer in business were unpredictable, had massive impact, and only after they happen, we try to explain them as if we saw them coming. So we are talking about, 2008 financial crisis, even COVID-19, right? And I think it's the same thing for startup investment. And I sort of take some of these learnings from the book and apply it to startup investment and also due diligence, right? Because at the end of the day, I think whatever due diligence you do, and this is coming from experience dealing with a lot of portfolio, a lot of things happen and we are not able to predict. If I look back at, some of the failures and successes, I look back at the memo we wrote, extensive due diligence, a lot of time, I wouldn't be able to actually identify some of these factors that lead to success and failures, right? So not saying again that due diligence is useless, but I think it's also to demystify that whatever you think is probably not going to happen. But the biggest lesson I think I learned, is to really invest in certain type of founders, right? Because you know that, Black Swan will be unpredictable. I think one of the best lessons is to be prepared for them, right? I think the first one I apply a lot when we do due diligence is we try to basically embrace uncertainty. So we are looking basically to invest in founders who really strive in unpredictable environment. So we spend more time evaluating this, how they actually handle with uncertainty, etc. Most of the founders, we are not able to do that. We have a lot of difficulty when this black swan happen, right? Like COVID. The second one is we try to look at business who have this kind of, we call it anti-fragility factors. So we back startup, who can pivot, adapt very quickly to market shift, or are not fragile because they don't, they are very short in cash, etc. So that's another things. And I think it also sort of impact the way we look at the portfolio. We always advise, again, to have a kind of diversification of portfolio, have a good balance between safe bets and high risk, high reward type of opportunity. Nothing new, but I think, again, looking at the performance of our angels, I think a diversification of portfolio was actually one of the mentions of success. Maybe next slide. I think I have 10 minutes left. Okay. This is also, I think, one of the biggest lessons. This is a lot of text, but I think sometimes as angel investors and also us, we focus too much on what entrepreneurs present to us. They present their vision, their tractions, their financial projections. But I think lesson learned, the real risk often lie beneath the surface, right? So it's not about what they show us, it's about what they don't actually. And example, when you talk to founder-related risk, like personal financial struggle, emotional attachment to the company, hidden conflicts. This is not something they necessarily tell us straight away. Even if they are transparent, it's not always something they will share. And this can really cloud our judgment and decision-making. Second one, right? I think what they don't show us is unrealistic expectation, overconfidence, over-promising result, poor resources planning, etc. That's not something you obviously see at first. It's you need to dig a bit. Yeah. Same thing on the business infrastructure, governance issue, etc. So I think the story short, as investors, when you do due diligence, you really need to look beyond the pitch and ask, tough questions, dig deeper, uncover what's beneath the surface, right? Because what that's where actually the real risks are, not in what they show us, right? So it doesn't mean they lie, but obviously there's a certain bias to pitch. So I think digging has been kind of our forte in terms of at least minimizing risk. Next slide. So this is I will try to explain in a simple manner, but I think it happened a lot with angel investment, where usually you are quite in a rush to make a decision. Founders want the deal to happen very quickly. So as angel investors, we are easily caught up into like frenzy, quick deals. But the reality is, for me, best investment we are never made on a single data point, meaning they are not made in a rush, and they are made actually by recognizing patterns over time and not to invest in dots. So I think just think like as a founders as line and not dots. When you get to single meetings, you only give you a reference point, what for how they are today and how they are going. But if you meet them over time, and you meet them early, before they are fundraising, for instance, you gain actually valuable insight into how they think, how they execute, or how they handle adversity. So to me, it's the same thing as a relationship, a relationship as Aaron Rush, just like sort of marriage, once you invest, you are in it for the long haul. So the worst thing you can do is write a check without understanding the entrepreneur trajectory, only to find out later that you are misaligned, right? So advice is, again, imagine you just receive a pitch, you don't know actually how much has been, plan, etc. So meet the founders early, stay in touch, track their progress. We like to build trust on both sides, and we try not to invest in dots. That's why when the deal is very quick, etc., we try to pass. We will rather actually work a bit with the entrepreneur and see actually progress and pattern, and not invest in only one data point. And this has proven to be a higher chance of success for us. Next slide. Okay. So this is, it sounds obvious, but I think, you're going to receive a lot of information for the entrepreneurs. And I think one of the points is to really filter, I think, what they tell you, and getting insight from multiple parties. And that's why we like to say that you need to build your support system, and if you don't have necessarily the capacity to do so, turn to intermediaries like Angel Studio, or there's a lot of angel group who can actually provide this support, but that happen to be very useful, right? So get industry insight. If you are not from the industry you are investing in, if you want to check the team, then be able to actually pull quickly ex-employee, ex-colleagues, etc. This is difficult to do, obviously, if you are not based in Indo, but and that's why you need some of these intermediaries to help you. But without a support system, based on our experience, it has been very difficult to maximize exit and good investment, right? So there's obviously a long list of experts, people we can share. So happy also to be of use here. Next slide. So we have seen this pattern a lot, I think, in our group around, when the due diligence is done and the decision to invest is being made, I think the investor tend to relax a lot and say, okay, deal done. I'm just going to relax a bit and not spend too much time. But to me, actually, that's the hardest part is not done, actually. We have seen a lot of mistakes done on the execution part, so all the legal side, documents, agreement, etc. Sort of investor being tired doesn't spend a lot of time, and bottom line, a lot of mistakes and a lot of issues happen, not because of bad due diligence or good due diligence, just because the legal part is not done properly. So again, it doesn't, due diligence doesn't stop at this step, invest a lot on execution as well. And second one is, it sounds obvious as well, but if I were you, I would probably invest more resources and knowledge building, more in terms of portfolio management. As I mentioned, I think due diligence is useful, but it's not a guarantee of success, but a good portfolio management, being closer to the company, being useful to them, has been actually for us a more a sharpest way of potentially guaranteeing return, right? So again, due diligence is a interesting topic, etc. But I will say execution and portfolio is probably where the hard work is more critical. I do have just a couple of minutes. Okay, this is a long list of what I wanted to share, but yeah, happy to go through all of them. You know, I wrote a couple of articles around each of these topic, but yeah, hopefully it can actually guide your due diligence. And I don't have too much time to go through everything, but yeah. I think next slide, almost done on time. So bottom line, look, we are happy to help. I think what Angel Studio is doing is quite amazing, and there's so much we can share. I think with Arifin, we will be in touch and happy to share a lot of slides, insight, case study. I'm writing quite a lot of case study to share our successes and stories, what happened, what we did wrong, you know, at the due diligence part on the legal side. I think learning from mistake has been quite an interesting part of our journey as well, and success as well. And yeah, and you know, we are here not only as a service provider, but since 2012, really trying to build the ecosystem of angel investment, which has not been an easy journey, but hopefully we will be able for Angel Studio to contribute more.
Thank you
Uh,
so much,
yeah.
David. It's definitely it's a very rare opportunity to get David Soukhasing to have such a deep dive on angel investing and also on due diligence. I think due diligence is a very important subject for all of our angels. So please, if anyone has a question, please ask them. But I personally, I actually have a question for you because initially you said how to dig. You have to dig deeper if basically if you have a meeting with an entrepreneur, and the entrepreneur normally, as you mentioned, will give you vanity metrics. But like, can you give a simple example of how to dig deeper, basically?
Um, I think for us, first is we spend time usually. We run away from these, which are like, you know, oh, next week I need the money. We like to spend time. I think it's just critical thinking. Like yesterday, I received a couple of metrics, and somehow I trust my gut feeling that the metrics looks odd or weird for the industry, and I didn't have necessarily a reference point. So I just pick up the phone and talk to someone who has been in this industry for 10, 20 years and actually gave me a perspective, right? So that's what I mean. I didn't sit on my confidence and whatever 10 years I've been doing that. I think humility and trying to call someone who knows better. So I'm by nature, I think, hypercritical about everything I receive, and I try to benchmark. Yeah. So in that case, it was basically leveraging experts, and I.e. the importance of network and yeah.
Okay, lovely. And also earlier you mentioned basically if you have one meeting, it's a dot. But if you basically have several meetings, then you can start to have a pattern. And you said that even happens right before you even start investing. So you even start talking about investment opportunities.
Yeah.
So
So
how do you set your targets of what type sort of progress you want to see?
yes, I think ideal case for us, actually, we source deals that are not raising. Actually, ideally, we meet entrepreneurs early through accelerator incubators or through actually our connections. So they come to us with the idea that at one point, hey, David, I'm going to raise, maybe in 1 year, maybe in 6 months. So we start first, our sort of signature is to work with deals who don't raise, right? And then obviously, you know, when they are ready, 6 months down the road, we can see the progress because they keep us informed. So when the first time we meet, for instance, if they're going to tell me, look, David, in 6 months, I'm going to hope to get this revenue, this kind of GMV, this kind of, you know, customer list, and I can see if it's actually they achieve it or not. I can see the progress, you know, in terms of recruiting, etc. So for us, that's the ideal case, and probably I would advise to work that way, is to not only get deals that fundraise, you know, and give you 2 or 3 weeks to to make a decisions, but to actually look at these who don't raise, founders who are not fundraising. So you can actually, when they are fundraising, already have a bit of data points, you know? So
Mhm.
you have an advantage versus other investors who only look at the deal when they are fundraising.
Okay, and we have a question from Kunto. Kunto, is, for context, he is based in Qatar at the moment, if I'm not mistaken. So he said, with the current emerging issues in Indonesia, especially with the e-fisheries case, any lessons learned from due diligence perspective? I guess the question would, in the context, would be like, um, everything looked great with e-fisheries, and a lot of very, reputable investment companies have invested in the company, and then all of a sudden, like a house of cards, it all crumbled. So, what do you think we could learn from that case?
You know, we look at the fishery. Actually, I can share the deck. It was back in 2013. So I think we were some of the first investors to look at. We didn't invest at that time. And to be honest, I was very FOMO at that time. I said, shoot, we missed it.
Mm-hmm.
I would have, looking back, I really like Gibran. He was a great guy. We didn't invest because at that time I was working for a foreign fund. His English was not that great. We didn't believe so much in the agri space. But I would have invested actually. There's no way I would have trusted him, etc. So again, I don't have an answer because I would like to say, look, I would have identified something. I would have been one of them. I think that's what the issue was not at the due diligence part, is after this, it's probably lack of corporate governance, lack of oversight from the investors. Yes, but again, I think this is this type of event that I don't think we could have predicted it. That's why it came as a surprise for everyone. Yes, we heard rumors, etc., but I don't think anybody was able to predict this kind of situation. But again, I think it comes back to something we don't compromise is trust. If we have any kind of trust issue from day one, or any kind of gut feeling that there is something weird, we just pass, I think trusting your gut feeling has been probably one of the strongest. Any doubt, we just pass. We don't compromise on this.
Yeah, no, I completely agree. I definitely have more questions, but let's go over to Michael first, and then we can circle back to you later, yeah? So thank you so much, David, and hello, Michael. Michael from Ternakin. Yeah, so now we're talking to the CEO directly, so that's a great honor as well. So Michael, hello, how are you today?
Good, good. Thank you so much for having me.
Uh, Thank you so much for coming here. It's a great honor for us to have you here. I actually had the great pleasure of going to one of Michael's farms, or urban farms as he calls them. And it was definitely a very interesting experience seeing all the ikan lele berkeliaran di mana-mana ya. So about Michael Hadiono, Michael Hadiono is the co-founder and also Chief Executive Officer of Ternakin, an Indonesian aquatech company that leverages advanced technologies to assist fish farmers in enhancing productivity and sustainability. And Michael himself, he has a lot of experience as a consultant, basically in the consultant space at EY, Accenture, Heineken Astra, and Antler. I think let's just straight away go to Michael. So, Michael, my question to you would be, and maybe so that our audience understands what Ternakin is, can you just briefly explain what Ternakin does in your own words?
Sure, sure. All right. Thank you. Thank you so much again for having me. I think hopefully I can share a bit some thoughts and experience from the founder's perspective, because earlier David shared more on the investor point of view. So now I'm trying to share from my point of view in terms of founder's perspective. Again, I'm not the expert here, still learning something new every day, but so far it's a fun ride, right? So just to give a context, my name is Michael. I'm the CEO and co-founder of Ternakin. To explain briefly about Ternakin, Ternakin is a fish farm operator company. So basically, we operate fish farms in various locations across South Sumatra, Lampung, Greater Jakarta, and West Java. So what we do, we cultivate fish, not the wild catch in the sea, yeah, but something like this, the one that we farm. For example, pangasius, or in Indo we call it patin or
Mm-hmm.
dori.
Mm-hmm.
Catfish or lele, like Arifin said, tilapia or nila or mujair in Indo. Uh, the way for us, the way we scale our farms, we call it through co-ownership model. So what we have is that we have retail investors like friends, family, colleagues invest in us to build or acquire fish farms. So we fully manage the operations, provide the supply chain, and we do profit sharing with our investors. We are fortunate enough, just to relate to the in terms of investment, we are very fortunate to have different type of investors, institutional like venture capitals for the equity of the holding, as well as the retails, yeah, like angels or investors to our farm, and we do profit sharing with them, not in terms of valuation, yeah, but more like profit sharing whenever we have harvest time in the farms. So I think to conclude, just to give you the let's say the analogy, if you know about red doors or Oyo, we are like Oyo or red doors for fish farming. So we build, acquire unproductive farms, we make it profitable, handle the operations using our standardized template, SOP, and also supply chain.
Okay. And I mean, as you mentioned earlier, we mostly saw it from the perspective of the investors, right? So from the perspective of an entrepreneur, like when you first meet an investor, when you have this whole due diligence process, like how is it for you? Because again, I mean, the audience here is all angel investors, and obviously we all see it from that point of view of, okay, what are you hiding? Like, what's going on? And
Yeah.
like from the perspective of an entrepreneur, like how is that due diligence process for you? Is it something that you enjoy? Is it something stressful? Or is it something that you look forward to because, you know, you yeah, basically just walk us through how it is for you, basically.
Okay. Okay. Nice question. So from I wouldn't say that basically whatever I say, it really represent the entire founders ecosystem, yeah.
Of
But
course.
for us, basically since day one, whenever we approach or let's say somebody approach us as an investor, number one, the mindset for us is basically they are our business partner,
Okay.
not the investors, because it has to be win-win. Yeah, it's not like we are, like begging money to the investors, but really the investors have certain motives, and also we also want to grow. So the way I typically interact with our investors are really as a friend, like
Okay.
really can call anytime, like did this kind of engagement. It's not like a boss, but really like a partner.
Yeah.
Why it is key for us? Because at the end of the day, uh, partnership of investment is not like 1 month or 1 year. For example, investors of our farms have committed to 7 years.
Mhm.
Investors for our from VC, they know that the journey is long journey. It's not going to be like 1 year, 2 years exit, yeah. But it's with this type of climate, it's going to be maybe 5 years, 7 years. I don't know, right? So number one for us, the mindset is about friends, like partners. The second, actually, when doing the let's say the due diligence, sometimes we as a founder, we forgot that it's also part of it's also for us to do due diligence to the other side. Yeah.
Yeah.
So behind the scene, actually, the founders are also checking the credibility or the behavior of the investors. Same thing like the other way around. I believe that the investors will check to other investor. Maybe they have like WhatsApp group. I don't know. Yeah. But for us, the founders, we also have the WhatsApp group. So to check, hey, these investors, they try to approach me. How do you feel? How do how's the work with them and so on, right? So we also do diligence, but of course we don't really like asking financial statement or whatnot, right? But still, for us, for example, the investors to our farm, I will never accept the money that the investors never come to one of our farms. because for us, if you don't even come to our farm, actually it might be that you are expecting only to double or triple your money, which is okay. Let's not make this as a business. Just maybe do like Fortune 500 or whatever. Do the equity, like the stock market and whatnot, right? You don't have to go to
Okay,
But for us, yeah,
question on that. For that, because we have some investors here who are not based in Indonesia, but maybe they would be very interested in a fish farm.
hmm
What about them? I mean, if they are genuinely interested, but they just physically cannot come to your farm, like, would that still be okay or not?
sure. We also have this kind of similar investors. Typically, either they ask someone as a representative, because for
Mhm.
example our investors also, there are some investors from Japan which they never go to Indonesia, so typically they have some network connection, or some kind of uh, a proper due diligence to visit one of our farms. Again, it's not like black and white. Yeah, it's not that if anybody never come, then I will never accept, but it's more like I just want to highlight that for at least for me, for us, we really assess the investors that want to put money to us as well.
Mhm.
It's not that we are cocky or whatnot, but I believe that will be the healthy relationship between founders and investors.
Okay. And I mean, as I introduced you, I did mention that you come from a consulting background. In consulting, you're in comfy, AC uh, offices, and now all of a sudden you're for lack of better words, you're a farmer. You're a fish farmer, yeah. And I
That's right.
have been to your farms, and it's very nice. But yeah, it can get hot, it can get messy and all that stuff. So what made you leave consulting and go into the fish farming business, basically?
Yeah, okay. Yeah, I think a bit about myself. Basically, I was in consulting for about 11 to 12 years. I was fortunate living abroad, working abroad in Europe and in Asia. Uh, because typically, I think let's say the biggest trigger for me when I decided to come back to Indonesia for good, yeah, is that the moment, two things actually. Number one, I feel like whenever I did any business transformation to my clients, I still feel empty actually, because it's you can imagine, for example, my clients back then was banks, for example. I do like automation of financial closing, for example,
Mm.
but I don't really get the satisfaction of really looking at the grassroots and get something really, like really physical. It's just me. Eh. So by doing this fish farming, actually, I can really see that my fish come from baby to grow to big, and then I help the farmers to to standardize the operation. It's just something that really makes me happy. So that's number one. Number two, yeah, because what several basically the let's say my specialty in the consulting was to scale business of my clients, especially for SMEs, like for example, healthy food, juice, or salon, hair salon. At some point, I realized that uh, it's like a babysitter, if you know. So when you have the baby with you, you have to love it, and you have to embrace it. But then after the baby, like bigger, then you have to leave, right? There's no sense of ownership for me. That's what was missing. That's why I decided to come back to Indonesia and build my own business.
Okay. It seems you have hit a nerve, so there are some questions coming in, but let's get to that later, which is good. Which is good, which is good. If there is questions, there is interest. So that's very excellent. I guess before we move on, I think one question that already came in, which is a question similar to mine, is like what makes your business unique? Because I mean, fish farming has been around for decades, millennia, maybe even, yeah.
Mhm.
So what makes your business Ternakin specifically unique from other businesses?
I see. Okay. So, the origin story of Ternakin was actually we are three founders and we actually operate our own farms. So initially we have our own farms, and then when we were invested by venture capital, we make the model to be like asset and fast scale, yeah, to be scalable. Basically the first point that we always have the struggle when we operate the farms is about the transparency. If you ask me how many times you have been tricked or manipulated by the farmers, so many times. Yeah, we came from that experience. That's why whatever farms that we operate, we want to make sure that we have the transparency. The transparency can be from the financial operations and whatever, yeah, so many things. That's why we built the system consists of technology, operation, and different layer, but we want to make sure that whatever farms that we operate, it's transparent. The purpose is we can be responsible to our stakeholders, investors, and also to the financial institutions like banks. Because for us, we also get loan from banks, so we expose our data to the lenders, so that we want to make sure that everything is really according to the actual condition, transparency. Then, hold on, sorry, yeah.
No.
Uh, then the second point is about the let's say the light asset. If you compare us with other traditional players, the biggest problem for traditional players in the fish farming population, they are in the aging population. They mostly don't understand about tech, financial, bookkeeping, whatever, and they cannot hit the economies of scale because they only operate one small farm. It's completely different ballgame with the shrimp farm. Yeah, shrimp farm, one giant, like palm oil. But for fish farm, it is very small. That's why the cost of everything is very high because you cannot get discount rate. Yeah, that's why we do co-ownership by doing this. Like, that's why we don't own the farm. We just co-own. We just fully operate, but the owner are actually the investors or the farm owners. Yeah, so I think that's, then the third is, of course, whatever farms that we operate, we templatize, standardize.
Okay. And I mean, it has already been mentioned a couple of times, but I think it definitely is important to address the elephant in the room. I mean, you know exactly that there has been, quite a big scandal surrounding the Indonesian aquaculture industry or aqua tech industry lately. So I guess maybe has that affected you in any way? And I think one question that popped up is like, it seems your business model is similar to that. Maybe you want to counter that if that is true or wrong, and if it is wrong, why is it wrong?
Okay. Okay, first thing first. So, what if is there any impact in terms of efficiency? For us, I don't want to discredit anyone or any
Yeah.
company.
Yeah.
From our perspective, the problem is perhaps the founders or the team, not the industry. That's number one. Agriculture and aquaculture has been around for decades.
Yeah.
Especially if you know, in terms of the news from Mr. Pak Prabowo about the food security and whatnot, right? In fact, for us, whatever media says, what you see is actually in the media, in LinkedIn or whatever, right? But we are really the player.
Yeah.
Actually, it's a big opportunity and growing market. Yeah.
Okay.
Again, maybe as a founder, we always have this kind of optimistic mindset. Yeah. So we make everything become positive. Maybe it's just our mindset. But anyway, we reflect our skill set and expertise, right? We just block all the noise outside. Yeah. Focus building a business that make profit, sustainable, and yeah, it's okay. The media can say anything, but for us, we just focus on building, and for us, it's an opportunity, so it's fine. And even for our investors, they believe in us, and you always have two sides of story. You can
Yeah.
see it either it's an opportunity or it's a problem. If you keep focusing on a problem, then it becomes a problem. For us, it's okay, doesn't matter.
Okay, lovely. And I think the second part, I think we haven't really gotten to that yet, is
Mhm.
um, one question or concern, I guess, was is your business model very similar to e-fisheries, or is it something
Mm.
completely different in your eyes, basically?
Okay, to put it simply, before e-fishery got problem, actually e-fishery is our customer, to put it
Okay.
simply, because we sell our own fish to them, which they have a lot of money. That's why the price is really great from them. But after they left, because of the situation, we can easily switch to other customers. Doesn't matter. So to give you perspective, we are more like a millennial or Gen Z farmers, pool of farmers. Then we sell the fish to other customers, including e-fishery back then.
Okay. Uh, this is very interesting already. So many questions coming in yet. Tapi we'll get to that later. I
Yeah.
think just to there's one more question which I think is very important, but we'll get to that later in the Q&A session, which is supposed to happen in the Q&A session. But because they were similar to the question I wanted to ask you anyway, so it's fine. I think you already sort of touched on it earlier, but basically, you said there are two types of investors that you have, yeah? So you
Mhm.
have a holding company, I assume, which owns basically the IP that you own, your trademarks, basically ownership to, or yeah, I guess ownership to all of the products that all of these farms produce.
Mhm.
And you only have institutional investors. To the ones who are still confused with that, basically it's like big VCs or banks, something along those lines, yeah, who have ownership stakes in your holding company. And then you also have a co-ownership model for retail investors, which is angel investors or individual investors, yeah.
Mhm.
So are you still open to that, to the co-ownership model, basically, as of now?
Yeah, for sure. That's the way we scale our farms, the number of farms that we operate. So the difference, just to give you two different perspective, the institutional or the VC is really the holding company. Typically, the money that we use in here is for building the investment, the long-term investment. For example, the product, the team, building business development, and so on. Whereas the second pocket, which is the co-ownership farm from angel investors, we do profit sharing for this, so there is no valuation or whatnot there. It's really profit sharing, very simple. Interest rate, like not interest rate, but profit sharing. So certain portion according to the performance, and also we have some guarantee because we can subsidize various farms. That's why we commit for the guarantee. Then we use it for either building the farm, buying the feed, and so on, according to the budgeting or Indo RAB.
Okay. So you
Yeah,
basically have a minimum guarantee in terms of when you think approximately a break-even point will happen in the farm, yeah.
that's right. That's right. Yeah.
Can you share like what sort of minimum guarantee you have approximately?
Yeah. So typically, the farms that we have operated in terms of BEP, break-even point, typically is about 4 years, either 2 or 3 years, typically, yeah, 2 to 3 years. In terms of rates, typically the guarantee from us is 18% per annum, 18% per annum.
Mhm.
But typically, like I said, the BEP typically like 3 years, so it's about 30%. In reality, in reality, it's about 30%. But the minimum for us is 18%.
But as you
Why
said,
we?
oh, sorry, continue, please.
Yeah, why 18%? Again, it's because we also get the rates from financing, which is about 18% per annum. That's the thought process behind it, why 18%. And the second, how come we can have a proper guarantee? Because we also subsidize for all the farms that we operate. So if let's say there is one underperforming farms, then we can subsidize to other overperforming farms in a way.
Okay. And
Mm-mm.
you personally, I mean, if anyone has a question on this, please ask more questions. But if not, I guess it's also important because, again, before we only saw everything from the perspective of an investor. But from the perspective of an entrepreneur, as you mentioned, you also do your due diligence on investors, right? So, what kind of investor are you looking for? You mentioned earlier someone who, for instance, at least has the desire, genuine desire to visit one of these farms, yeah. Like
Mhm.
besides that, do you have any sort of ideal investor that you think, you know, is a good fit for you, maybe for the co-ownership model?
I see. Okay, maybe number one, maybe I rephrase not about visiting the farm. Visiting the farm is just less important, but really what I want to highlight is want to be our partner. Again, it's not like a boss and subsidiary, yeah, but really like a friend. That's number one. That's why typically whatever investors that we have, like really friends, become friends, right? Number two is typically the investors that came into us is someone that has let's say social impact kind of let's say social impact desire, meaning if let's say if the let's say the motivation is really to double or triple the money as fast as you could, then it's not a proper business. This is not the business. This is about long term. This is about impact, either social, either yeah. So for example, the farms that we operate, we really empower the power of ibu-ibu, mak-mak in bahasa Indo, the power of mak-mak to fillet the fish, also to encourage the society to be fish farmers. That's why our fish farmers typically are the local people and then quite young, rather than doing jobless. They just come to us. Everything is standardized. They learn, they grow with us. That's really the goal. So to cut it short, really the investors, the typical investors that we get along typically is not the one that really about money to get as fast as it could. Yeah, you can find elsewhere in terms of break-even point faster than 2 to 3 years, but it's about long term and also the impact.
Okay, lovely. Thank you so much. I guess one question that I have that probably some people will have too is, I mean, fish are living beings, yeah. So I mean, things can go wrong. Humans as well, we get sick, you know, sometimes very sick. So how do you handle if, you know, your fish gets sick? Ada nggak sih maksudnya yang benar-benar gagal panen banget gitu, where you just have a failed harvest? Is that something that is a possibility?
Okay. In industry practice, there are two types. So for example, maybe you guys familiar with shrimp, and there is a group of fish, right? The difference, shrimp is high risk, high return. It can get sick easily and it will spread the entire ponds. Whereas for fish, it's more durable. You can imagine catfish, yeah, and pangasius. So they are more durable, fortunately. So for us, it's just deliberate decision. We prefer to be more stable and less risk. Yeah. So the fish could be get sick, of course. Yeah, it's just like us can get because of water quality and whatnot. Especially, it really you imagine for us it's about air, but for them it's about water. Water
Yeah.
is where they live, right? So for us, so far we never for fish farm in industry standard, it never get the entire ponds died. Yeah, it's in 8 years of farms that we operate, the old farms, it happened only once. It's because of flooding, actually, not because of the disease.
Okay.
And also there are different types of farms that it's not like this, the one that is like traditional, but the one that actually Arifin said, he visited one of our urban farming concept where it's actually like a tarpaulin, like a circle tarpaul ponds about 3 meters square, and there are about 50 uh, 50 circles. Then if one fish, one pond died, then it's only one pond. It's not going to contain the entire farms. Yeah,
So
but
yeah,
of
you
course,
can
disease
contain
can happen.
damage.
Yeah,
Yeah, you can
contain
contain
the
the
damage.
damage to one pond or maybe one or two ponds, and the rest will not be affected by that. Yeah. Okay.
Yeah,
Excellent.
yeah.
So basically, we have some questions. Some of them I sort of already put in, but there's one question from Dion. He's from Learning Capital. So hi, Michael. Thank you for your presentation. Just to make sure, do you handle the distribution of the farm's fishes as well, or is the responsibility of finding the buyers, does it reside with the farm owners? And here is one more question, which you don't have to answer if you don't want to. Can you disclose to whom do you sell the products? I mean, you can be
Okay.
vague about it, or you can be very general about it if you want to.
Sure. Okay, I will not mention the name, but the typical customers that we sell is actually fillet, post-processing fillet,
Okay.
fillet factory. That's like the 80% of our products goes to the fillet factory. And also we call it in Indo bakul, or like fish wholesalers. So it's not going to be the stall, the lapak or stall, small stall, not the pecel lele. It's too small for us. We play big volumes. We
Okay.
we are more like B2B kind of thing, right? That's about the customers. Then the question about do we handle everything? Yes, of course. The reason why we want to do this co-ownership is because in aquaculture, in fish market, the way we can sell is not like uh, the way we do our sales is not like the traditional farmers. Traditional farmers, what they do, they cultivate fish, and then when the harvest time comes, they are panic and try to sell. But for us, we already lock the quota to our customers. That's why we need to have certain sizable scale so that I can commit. So for example, for catfish, we need to deliver in one customer, it's about 2 tons of catfish every day, or every 2 or 3 days. So what we do, we use our own fish farms to supply the stock, as well as to, unfortunately, we are under supply currently, so we need to sell elsewhere
Oh,
with
you need to
very,
buy from elsewhere and then you sell it to your
yeah.
Okay.
But because we do have the quota, that's the way we do the sales.
Okay.
Yeah,
So
so
you
we typically handle everything. Yeah, really typically handle everything. The
okay.
operation, feed, seed, like the baby fish, the off taking.
Okay, wow. Okay, so full end-to-end service, yeah. There's one more question from Kathy Yang, and basically her question is, why did you choose the fishery industry? Where, I mean, from consulting, you could have gone anywhere. You could have gone to chickens, you could have gone to farming, uh, traditional farming, but why did you choose fish?
Okay, number one, it's faith. Again, I don't want to sugarcoat everything because I see big market of potential. I don't care. It's about faith. Actually, I met my co-founders, and one co-founder is actually I just met in one incubation program, and he has experience in aquaculture. And when we formed the team, I also invite my old friend, has been in aquaculture. Basically, that's the let's say the way how it was born. However, when I joined that incubation program, because actually prior to Ternakin, I have other business, which is the logistic.
Okay.
Then I really want to do something more grassroots, because when like I mentioned earlier, when I do the banking, the consulting, it was too, like in AC and whatnot. I just don't feel it. Same thing for the logistic. I just don't feel it. This is something that I really enjoy.
Okay. And I
Yeah.
think last question before we go to David, because David, I think, has a few questions for you as well. From Chris. So Chris is our friend from Makassar. So his question is, hi, Michael, thank you for sharing with us. It's really interesting and impactful business. Kudos to you. But I'm curious, how do you handle the loss of livestock through robbery? I heard it's quite common that locals just take fish sometimes. So is that a problem that you are facing? And if yes, how do you tackle that?
Yeah, thank you for that question. Like I said, that's why if you want to ask me about all the manipulation and whatnot, I had that experience, you know, like we were fooled and you know, but for us it's about iteration. Yes, it's not only about the fish, because if you imagine for chicken, you can see with your bare eyes that the chicken is running around on the land, but for
Mhm.
fish, it's actually inside the water, so you cannot just swim, right? So you have to really see. Yeah, so that's why whatever operations that we do, for example, the audit, the input data. I give you one example. Basically, whatever farms that we operate, the farmers have to input the data into a paper, and then our headquarter team that is more tech savvy helping to input to the application. The
Mhm.
purpose is really for us to crunch the data, and if something fishy is going on, for example, how come the fish get big in very fast time? Because we
Okay.
already have some kind of algorithm or iteration. We know that this will never happen. That's why then we will conduct the audit to the farms that we operate. Hey, something is wrong here, or
Mhm.
maybe let's say if stock of name suddenly the feed. Hey, how come the fish becomes very greedy? Yeah, because we know that if the baby fish will never eat like 1 ton of feed. Yeah,
Mhm.
but how come the stock of name lost 1 ton of feed? Then we know oh something is wrong. So for us, we are using tech not to fundraising. That's number one. Yeah. It's just for us really to protect the transparency, and second, so that for us because we cannot really standing on the side of our farms every day, right? And it's everywhere, right? So
Mhm.
our SOP really enforce the field team to input, and then we analyze behind the scene and to conduct audit.
But I mean, I guess then robberies have happened, but has it ever gone so far that you needed to involve the police or, some other means of law enforcement?
Mm. Well, let's not say robbery, yeah, but stealing maybe. Yeah. Stealing is fine. Robbery is more like you threat the person, but stealing sometimes the most common stealers is actually the feed, because you can sell it to other farmers,
Oh,
feed,
okay.
and also the fish. But
Mm.
fish is actually pretty hard. It's not like you can swim and then take one fish. Yeah, you have to dry it, so you really have to put so much in effort to steal actually.
Okay.
Yeah.
Well, that's
But
good to
in terms of the let's say if you think about robbery in the traveling when the car travels, it never happened.
Okay. Okay,
Yeah.
good to know.
People
Chris,
wouldn't know that it's transporting fish.
well, Chris, I hope that answered your question. And I think no more questions from our audience. So maybe from David. David, do you have any questions for Michael?
Yeah, so it's an interesting coincidence. Actually, one of my clients asked me to look into your business. Yeah. Okay. Yeah. I
Yeah.
mean, I think maybe one question is more like the long-term vision. I think, some founders are here for the short run, quick exit. What is your sort of um, path strategy? Are you more in the, steady growth, sustainable growth, carefully managed, or, are you one of these founders, looking for this quick exit, VC play, etc., trying to get the philosophy of the way you run the
Mm.
business?
Okay. Okay. And number one, I always say to my team, the purpose of business is not to make GMV, but really to make profit. So that's why we've been profitable. That's number one. Of course, some people will challenge us, or maybe if you don't be profitable, maybe you can grow even more, right? But it's always in our DNA to be profitable first, because if something really goes wrong with this startup ecosystem, I know that at least this business will not die. That's number one. I don't want to make the situation where I have to really forced to sell the company because we are just running out of money. That's number one. It's about profitability. Then number two, what we are trying to build actually long-term game, right? We are still in the seed stage, yeah. We are still very early. Whatever I say today may be different in 1 year. I never know. But the point that we are trying to make is we have done so many different trials, try to prove it as fast as possible, because we can grow the business in either horizontal or vertical. That means we focus on as a fish farm operator for different type of commodities because there are plenty commodities, or horizontal. We focus on one, let's say pangasius, very industrialized and export, but we do end to end. These two lines are something that we keep building.
So it's not, I mean, it's more like a general questions, but, you know, I think lately we have been talking about this impact investment, social entrepreneurs, and you mentioned, I think the way I think you would love to have investors who also care about impact, and you do care as well. But, you know, I think it was yesterday, someone questioned, like, can you name me a successful impact entrepreneurs in Indonesia? If yes, which one? So in that case, you know, if you were to think about an entrepreneurs who have contributed to impact, you know, whatever, smallholder farmers, fishermen, you know, through education, financial inclusion, which entrepreneur would it be and why?
Okay. I don't have a good answer, but for me, to make an impact, you have to be profitable first. It doesn't make sense to have a very nice story, narration about the power of ibu-ibu, you know, waste management and whatnot, but the economics doesn't make sense. That's why whatever initiatives of impact that we have built, we typically target into a certain level to prove something, but it's a matter of, it's either we proceed to continue or we don't go all the way, because again, I believe number one is a business is not about impact, but it's about profit first. If you have profit, you want to make impact, then easy, I can give CSR or whatever, right? It's also impact actually. So for us, if let's say it doesn't make profit and the economies of scale doesn't hit the right amount, then I'll just put it as a POC and then move on. Or if somebody believes in us to grow that kind of impact story, then of course we are happy to operate.
Maybe a last question is more like, you know, so everybody is always talking about e-fishery, I think, around the world, and, you know, we see it so much as a bad thing for the ecosystem, but I do believe you also unleash opportunity for entrepreneurs. How do you see this failure or whatever, like you call it, being an opportunity for you? Both market size, does he leave more market for you? Does he help you to stand out? Or like, how is it a positive thing in your case? Or it is maybe
Okay.
it's not at all.
Okay, number one, again, whatever happens in media, we typically block. But whatever happens in the market, actually, it's a good moment, because when e-fishery is in business, it becomes a problem for the market, because again, don't want to discredit any company or whatever. Yeah, it's just their way. The way how their sales work is actually like burning money on the left and on the right, if you know what I mean. Meaning supply, you give kickback, and then on the right, you give kickback. Of course, then nobody can because they have a lot of money to do that, right? But it's not sustainable, meaning they actually use the investor money to do that, right? Yeah, for us, that's not the way. We have been approached by so many e-fishery sales. The first question that we ask, what's your philosophy about sales? If they talk much about revenue, then we typically, okay, it's about profit for us, margin. That's it. So yeah, so in reality, it really helps the industry to reset the mindset, because back then maybe the farmers think that, oh, I can sell the fish like this price, but now the big giant that burning money goes away. Oh, so now I have to really, you know, do business properly with other business so that they don't die, right? So yeah, again, it's just my opinion. Maybe I'm wrong. but for us, it's an opportunity actually.
Got it. Arifin, all good, or you want more question? Or?
No, I actually already had a very long conversation with him. I went to one of his farms and we had a very long conversation while the lele, the how do you call them? The catfish, catfish were swirling around. No, I mean, I have no further questions for Michael. I think all of them have been answered. I think I will ask again the whole group. Does anyone still have any questions for Michael or, for instance, for David? And I think Michael as well. I mean, if you have any questions to David, go ahead. I mean, you have the head of the managing director of ANGIN right in front of you. So if you
It's
have
just
burning
CEO.
questions you want to ask.
Everybody can be CEO, managing director.
It's okay. I can just PM him separately. Japri, we Japri. Yeah.
Okay. I thank you both. I thank David for your time and for your wonderful presentation. And Michael, I thank you for your honesty and your candidness, and also David for your honesty. Yeah. Especially, I think for me, what was eye-opening was about the due diligence. That if you do heavy due diligence, or if you basically just follow, that the results are not that different, or maybe even if as a follower, you actually have more success. So I find that very interesting. I find your pattern approach very useful. And for Michael, I like it that you're very pragmatic. That you say we have IoT, but we don't have IoT for fundraising purposes or for gimmicks, but we need it in order to, for instance, reduce theft, or basically keep an eye on our product. So I've definitely learned a lot from both of you today. And to all of our investors here, and later on we will put it in our newsletter as well. If you are interested to learn more about Michael and about Ternakin specifically, about the business model, please do reach out to us. You can reach out to Raka, you can reach out to Iqbal, and then we will definitely get back to you, and maybe we can set something up more intimate. Moving forward, so thank you again. Thank you so much, Michael, and thank you so much, David. So now we will do some basically some interior admin. So Michael, if you need to go somewhere, or if David, if you need to go somewhere, please do. We are just gonna finish up with our angels here. So basically, today we did David and Michael, and next week we will have Joel Shin, a very prolific corporate lawyer from Singapore. He's very active in the fintech space and the startup space, and he will be talking about basically cross-border investment opportunities and challenges. So for the diaspora wanting to invest in Indonesia, or for Indonesians wanting to invest abroad. And then on the 20th of March, we will have a community event, which is an offline event. And we will have Helga Angelina from Bergreens coming in, talking about funding mechanisms. And then we will also have Anton Irawan from Goritax talking about tax planning. So we definitely have a lot of exciting things ahead. And again, thank you so much for your time today. And we do have a post-event survey. And then after that, I will leave you to your respective engagements. And very sorry to take up so much of your time today. Yeah, wow. I learned a lot today, Michael and David. Thank you so much.
I will need to catch up with you, Michael, actually, after the.
Sure. Maybe yeah, I can ask Arifin for your WhatsApp.
Perfect. The
Yeah,
world
yeah.
is very small, that's what, we are connected through these potential clients who want. And I'm also part of Antler. Last time I was listening to your presentation, it was very interesting. Yeah.
Yeah. Thank you. Thank you.
Okay, Raka, how is it? Are we still on? Okay. So I think we can leave it there. So again, thank you for your time today. Sorry for taking up so much of your time. But it was a wonderful discussion with Michael and also with David. And again, Michael, thank you so much for coming. And David, thank you so much for your time and also your expertise today. We definitely learned a lot. So with that, I end the session and thank you so much to everyone.
Thank you.